Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equities set for a positive opening for second consecutive session today. Big boy, TCS earnings eyes. Basically, it's the gift Nifty right now, which is eyeing at a gap up opening or hinting at a gap up opening coming in for the last week. US stock has risen for third consecutive session, tailing lower bond yields, and US stock futures are steady amidst fading fears of rate hikes. Also, let's talk about Asian stocks. They've hit two-week high as Fed talk turns dovish. Also, let's talk about FIIs. They've offloaded shares for yet another session to an extent of 1,005 odd crore, and DIIs on the other side continue to be the buyers. They've purchased equities to an extent of 1,963 odd crore within on October 10th. That's the provisional data. But let's also look at the FIIQs in the F&O categories. Well, they are sellers most places, but what remains to be seen that FIIs have been buyers in index and stock futures essentially. Beg your pardon. That's where a bit of you're looking at the data coming in. The net buyers to an extent of 4,343 crore in the stock futures. Along with that, also there are the buyers in the index futures. There is a huge sell-off which has been seen in index options and bank Nifty options if you put the data put together. Let's also talk about the F&O ban. What's new in ban is, we don't have any new entries out there, but what still remains in the ban is Delta Corp. And along with that, you have Manappuram Finance, Indiabulls Housing Finance, PNB, L&T Finance and MCX. That's the one that still continues to be in the ban. Let's also talk about the option queues that we have. Nifty PCR 1.31 versus 1.04 seems to be a little bit in the overbought territory right now, because 1.2 level is usually a very reasonable level to look at. But earnings that need to be watched out for, TCS, which will be in focus ahead of its September quarter earnings on October 11th. You have Delta Corp also, which will be reporting in the numbers. In terms of newly listed companies, few of them will be reporting in numbers, something in the like of Sammy Hotels, Signature Global and Zaggle Prepaid Ocean Services. These are the ones just made an IPO, just raised some funds via IPO, and now they've been listed on the exchanges. Of course, they're going to be reporting in their quarterly earnings. Remains to be seen how do these newly listed companies perform, but an interesting update coming in for you. CLSA has upgraded India, typically portfolio allocation to 20% above that MSCI benchmark versus 40% underweight earlier. Says that the previous contrarian underweighting rating that they had perhaps worked for too long, and the position worked between late October 2022 and March 2023. However, now says that the persistent stance has been for too long with regards to the negative view coming in for a couple of reasons. But now there is a double rating update which has come in, and a couple of reasons there for that update. A is the rebounding credit impulse signaling or robust equity momentum, which has now become more manageable in terms of the energy pricing. It's also given in discounts, the present pricing, energy prices has given in discounted to the Russian crude, overall improving basic balance, and likely bond inflows are also expected to support in rupee, which right now seems to be the strongest. At least the growth for India seems to be the strongest economic growth across primary emerging markets. There's a fair value on the model, India model, with 22% upside. For India, it is a return to superior relative profitability matrix for India versus emerging markets, which again is working in the favor. Apart from that, there is also a trend breakout in EPS growth supported by GDP and revision in FIIs. What they also have mentioned is right now FII trend, or let's just say foreign investors do not appear to have overexposed themselves to Indian equities. That's a great positive coming in for Indian equity markets. And they've also spoken about valuations which relative to emerging markets peers remains distinctly at this point of time unappealing. It's also spoken about RBI amongst the most beholden emerging market central bank to Fed policy. And what essentially I think the moot point is that they've spoken about high conviction calls, where they've given stocks like RIL, HDFC Bank, ICICI Bank, Bharti Airtel, SBI These are amongst the list, and also you have something in the likes of L&T, Axis Bank, ONGC and Tata Motors. Some of the calls there from the CLSA report, the upgrade that has come in early in the morning. But let's actually also discuss the trade setup strategies for the day alongside a few recommendations from Rajesh Palviya, the Senior Vice President Research, Heads Technical and Derivative at Axis Securities. Rajesh, good morning. How are you doing? And how is the trade setup looking like today?
Good morning, Nickey. So trade setup looks to be on the positive side. We have seen both the indices have witnessed the short covering in the previous trading session, and looking at the close of Nifty at above 19,650, that the positive development has happened in the previous session. Short covering was clearly there. Most of the call writers have covered their position for 19,600, 650 strike. That clearly shows that now the supply zone is now thinner, and we may see furthermore round of buying action in today's session. To initiate this upmove, 19,700 call option one can buy, that which was closed at around 78 rupees. We are projecting target of 125 to 130 in the continuation of this uptrend which we are seeing. One can keep a stop loss of 55. If for Bank Nifty if manages to hold above 44,400, then another round of short covering we can see in today's session also, and then possibly 44,800 we can see in the continuation of this pullback action. So one can hold the Bank Nifty also with stop loss of 44,100.
All right, Rajesh. I'm going to come back to you in just a bit and address the market open first. What I hear loud and clear is the short covering activity perhaps could well be the play for the day. That remains to be seen. But right now, at least Nifty 50 is doing well. We're looking at a positive open coming in for the markets about that 19,700 mark, actually well about that 19,750 mark. Let's also talk about Bank Nifty. How is that stacking up? A bit of recovery that came in the previous session of trade came in on account of Bank Nifty, but in today's session acting no different. Gains to an extent of 0.5%, or let's just say 0.6% of gains coming in by Bank Nifty index. Let's also talk about the trend that is shaping up for the broader index, just to see if we're seeing even momentum stacking out across the indices. Yes, we are looking at outperformance coming in from the mid-cap index, 0.75% of gains, more than that coming in for the mid-cap index, and small cap too, perhaps momentum in line with what is there, that the momentum that we've seen for the mid-cap basket overall. The trend right now seems to be intact for the equity markets. But let's also look at the sectoral indices, essentially IT, because TCS will be reporting in the numbers and kick-starting the Q2 earnings season. Remains to be seen if it starts off on a positive note. Right now, the index is faring pretty decent. 0.5% of gains coming in for the basket. Let's also talk about the other sectoral indices that we have on the list. Pharma, FMCG, well, all are holding up, at least in green in the early deals. Remains to be seen how the day stacks up for the rest part of the day, how these indices fare. But right now it seems to be a positive start coming in for the FMCG basket too, along with that of the pharma. Also, let's look at the consumption story. It remains intact. Let's look at PSU banks before going on to metal, realty and auto, just to see if we are seeing similar amount of outperformance coming in from the PSU banks. Yes, we are looking at some amount of gains, perhaps not in as much in the quantum that we've seen for Bank Nifty, but clearly it is participating in the rally. It's a positive start with a bit of a flat start with a positive bias for PSU banks. Metal index also seems to be doing well, and in terms of other sectoral indices that we have, realty and auto, well, they are shaping up well in early deals. So it's a bit of optimism across for Indian equity markets, at least in early deals, but remains to be seen whether TCS and the commentary that comes in from the big boy actually could change the direction of the markets anytime soon. But let's also talk about the top gainers and the top losers that we have on the list, just to see how is the trend stacking up. DRL, which is yesterday's top loser, today's top gainer. DRL, Axis Bank and Adani Enterprises. These are some of the top gainers that we have on the list, along with Hindalco, State Bank of India and L&T. These have been doing well in trade, and also UPL, Bajaj Auto and JSW Steel. Also, let's look at the top losers right now, just to see how is the momentum faring in for you. Right now, we're looking at Coal India and Britannia. Market breadth clearly in the side of advances as compared to declines. There are just 2 declines as compared to nearly 47 advances. One stock remains unchanged. So you could see that in today's session. But let's also address in stocks that you need to watch out for. Of course, the list will include something in the like of TCS and Bank of Baroda. We're also going to be talking about MCX in just a bit, but TCS first, where the Q2 numbers which will be reported, it's likely to be a muted quarter. It's going to be continuation, at least the expectations are that it's going to be continuation of the softness seen in the 2 quarters previously. We're going to be discussing about the entire IT sector and TCS put together from Madhuchanda Day, who's the head of MC Pro Research, in just a bit. But right now we're looking at soft quarter. Dollar revenue, in terms of revenue dollar terms, it's expected to be up as much as 0.75 times sequentially. In constant currency, revenue growth is seen at 0.8%. The company will also be announcing it buyback detail. That's the one where perhaps a lot of community is really interested in. The stock has been perhaps in traction because of this development. TCS is set to announce its 5th share buyback in 6 years now. It's going to be rewarding in investors with the increasing cash on its reserves. Before this now, TCS has bought back its shares in 2017, 18, 20 and 22. Now, the IT major, valued at over 13 lakh crore, has bought back shares worth around 66,000 crore in the last 6 years. That's the one that's the point that needs to be perhaps noticed here when we talk about TCS and the earnings and the buyback that is expected to come through. Let's also talk about Bank of Baroda and the clarification that has come in on account of the onboarding of customers with regards to one of its app, that is BOB World. Now that seems to be restricted and subjected to strengthening of processes to the satisfaction of RBI. The bank says that it's already taken a couple of corrective measures to address the concerns, and it's initiated further steps to plug any remaining gaps identified by the existing customers. They're hoping, and they've clarified that the existing customers are not going to be facing in any disruption, but at the same time they believe that the order should not bring in any kind of impact on the bank's other digital banking channels, and the mobile banking applications per se remain to be fully secure. That's the clarification perhaps coming in from Bank of Baroda right now. And we've seen the stock actually not doing well in trade, down and out with losses to an extent of 2.5%. Citi also has come out with a report on Bank of Baroda, where it's maintained in the buy call rating target price of around 245 per share, and has said that this development will definitely moderate the pace of new customer acquisitions, and the moderation of around 43% in FDs and RDs and 44% in PPFs are being opened through BOB World. So that's the impact. 89% of personal loans were sanctioned digitally, and now this sourcing will not be as meaningful, as it just constitutes merely 2% of the bank's advances. That's the quantum effect that we're looking at. Perhaps not a meaningful one, but the stock has right now sentimentally reacting to this development. But we are going to be talking about this and more. Let's actually go back to Rajesh and check with him what does he make out of something like in TCS, and how could one now approach the TCS if they were supposed to look at it ahead of earnings.
Definitely, but the price behavior or price momentum will come by the announcement of buyback, what quantum of buyback they are going to announce. That will be the major trigger for the price to move in the near-term basis. We have already initiated a bull call spread strategy for our client. 3640 call option one can buy at 72 rupees. And on the other hand, one can sell the call option of 3780. By initiating this bull call spread strategy, your cost is almost 30 rupees. So that strategy may work out for the TCS. As we have seen historically, whenever there is a result post-earning, TCS always display a 2 to 3% kind of up move on the either side. But this time the buyback is the key trigger for the near-term price movement. So I think one can initiate this bull call spread strategy. One can buy 3640 call option, and on the other side 3780 call option one can sell. So that will give you a cost reduction of bull call spread. 30 rupees is your cost to initiate this strategy.
All right, Rajesh, we are going to leave it at that, and thank you for taking out the time and speaking to us this morning. All right, let's also talk about the fundamental side of the story. Earnings season kickstarts with IT major TCS reporting its numbers. How is the earnings season shaping up? Will that have a bearing on the Indian equity markets? What kind of valuation can we expect? To talk about this and more, we're being joined by Mithun Aswath, the managing partner at Kivah Advisors. Morning there, Mithun.
Morning. Good morning.
All right, your initial assessment for the entire earnings season, what stands out for you according to you in terms of the expectation and the preview reports, and which is a pocket of weakness or could be the pocket of weakness?
Yeah, I think Q2 should be a reasonably good quarter. I think in terms of where there's expected to be quite a good bump up in terms of numbers would be, on the whole oil and gas sector, especially the oil marketing companies should report good numbers, and that could give the overall earnings of the index a little bit of a fillip. Apart from that, I think the auto sector also should report reasonably good and strong numbers for the quarter. I think pockets like chemicals could see some pressure on account of the weakness that they are seeing in their prices. All in all, I think it should be a quarter where there is a reasonably good growth. And I think more than the quarter's earnings, I think the guidance that managements give for the second half will be closely watched. And you also need to bear in mind that Q2 doesn't have the festivals this year, and there is a bunching up of festivals in Q3. So that should definitely bode well for the markets.
All right. Also, your assessment essentially on TCS, the stock seems to be flat ahead of the Q2 earnings. Do you think it's going to be a disappointment coming in of sorts for the IT major and perhaps the whole basket? How are you viewing the entire space right now, and what do you think could stand out?
I think the Q2 results, the expectation is not very high in terms of the results per se. I think what investors will be looking at is actually the order wins. And the expectation is that in Q2, the large IT majors have bagged large orders. I think to the tune of $12 billion is what the expectation is for Q2 in terms of the deal flows. So more than the numbers, I think the deal flow momentum is something that what investors will be looking at, and that will kind of drive stocks. I think the market has pretty much come to the conclusion that FY24 will not be a great year for IT, but FY25 could be the year where the rebound in revenues and growth may come.
All right, Mithun, also your view coming in on banking and NBFCs. HSBC came in a report earlier and perhaps downgraded a couple of counters there. How are you looking at the entire basket, PSU banks versus private banks versus NBFCs in terms of valuation between the three in the pecking order? What do you like the most?
See, I think, what has happened over the last 24 months, there was a large dispersion between the private sector banks and the public sector banks. And the private sector banks enjoyed a large premium over the public sector ones. That premium has now contracted, primarily because the economy is doing well. And a lot of these banks who are laden with NPA have cleaned up their books. Now that valuation gap has narrowed. And that is why you're seeing underperformance from the bellwethers like Kotak and HDFC Bank. However, I think from here, the banks may move more in line with the earnings growth. I do not think that the valuation discount will narrow even further. It could happen in pockets where performance is durable, but I think it is better to maybe stay with the private sector banks which have disappointed over the last few quarters, primarily because of money moving out of them to the public sector. But I think from here it is going to be really earnings based. And if earnings growth happens, stocks will perform in line with earnings growth.
All right, Mithun, we're just going to leave it at that. And thank you for taking out the time and speaking to us this morning.
Thanks.
All right, let's actually clearly navigate our discussion and be more focused with regards to what is the expectation from the IT basket and TCS major, the IT major TCS today. And to talk about it more, we're being joined by Madhuchanda, who heads Moneycontrol Pro Research team. Morning there.
Hi, good morning.
Right, good to see you. It's just, let's start off from the basic. You think Q2 is going to be another quarter of disappointment for Indian IT players?
Yeah, more or less, the disappointment that we have seen in Q1 is going to linger on to Q2. So unlike many of the past years when Q2 used to be a seasonally strong quarter for IT, this time around we expect that softness to linger on in Q2 as well.
So typically first 6 months were good for the IT sector. Perhaps a note also that Moneycontrol Pro Research team has come out with where they've spoken about what was working in the favor of the stocks. But Q2 also is a traditionally strong quarter for these players. Will the optimism reflect in any of the numbers, even for the mid-cap space, if not just the major?
See, I'll just talk about the large IT players first. The trend that you're going to see this quarter is going to be a muted execution because the discretionary spending cuts continues. Companies are very cautious about execution. They are executing projects where they see immediate ROI for their investment. So in terms of the top line, that's going to be pretty muted. I mean, for instance, for TCS, we are expecting a barely 1% kind of sequential growth quarter on quarter. In terms of margin, wherever the wage hike has taken effect in Q1, for instance, that's the case with TCS, you could expect some sequential uptick in margin. Most of the large players are going to avoid any wage hike even in Q2. Well, that's not a particularly good sign in terms of how things are panning out in the near future. But in terms of order book, they are getting a large amount of order from cost takeout projects. So the order book is going to buzz, and that is going to keep the interest alive for FY25. That is our broad understanding on the large cap. On the mid cap sides, given their size, they're more agile, nimble-footed. Their penetration into their accounts has still headroom to go. So they are going to report a slightly better top line. But given that their valuation is already at a premium to many of the large cap players, especially players like Coforge, Persistent, who have consistently delivered, we do not expect further re-rating from here on.
Okay, point well taken. Just talking about TCS, what do you think the three key monitorables would be for TCS? And of course, the buyback plan, how much does that excite? What kind of quantum you think could be coming through? Most of the brokerages are pegging into an extent of 18,000 odd crore. 16, 18 is perhaps the range that they're working with. What could, perhaps be the catalyst here with TCS earning one factor that could perhaps change the direction for the entire IT basket, if at all?
See, we do not expect anything earth-shaking to come from TCS, honestly. The order book momentum is already expected. The margin uptick is already expected. The buyback is definitely a catalyst. But having said that, the way to look at large cap IT companies of the likes of TCS is to look at them as good dividend yield play, whether it is in the form of a dividend or buyback, but anywhere they're yielding between 2.5% to 3%. So long-term investors should look at these large IT companies sitting on huge piles of cash as dividend yield play, and TCS is no exception. So whether the buyback is 16,000 crore or 18,000 crore, that doesn't matter, because at the end of the day, they are going to return a lot of cash. Is about 70-80% of their free cash flow is going to get returned to the shareholders, either in the form of a dividend or in the form of a buyback. So large cap IT, I don't think, at least for the foreseeable future, they are not growth plays, but they are pure play dividend yield plays for long-term investors.
Right. Point well put. But Madhu, on a very broad base, it is TCS will be kickstarting the earnings season. Which sector do you think perhaps could do well within this earnings season, and also your view on financials? We saw a bit of NIM compression taking place in Q1. Do you expect the trend to perhaps continue in this quarter also?
Yeah, it is going to be very much like Q1. As we have seen in Q1, it was the domestic players who were leading the pack. And this time around also, we expect the domestic focused businesses like automobile, financials, to some extent consumption, although, the consumption pack will have better commentary than earnings because, the festive season is falling entirely in Q3. So those are going to lead the pack. The export-oriented sector are going to be a little subdued, which includes information technology, which includes chemicals, which includes a little bit of pharmaceuticals also. So these are going to be the more subdued packs, whereas the domestic, especially domestic cyclicals, are going to do reasonably well.
All right, Madhu, we are just going to leave it at that. And thank you for taking out the time and joining us this morning.
Thank you.
All right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.